most well-known technology companies in the world. Since it was founded in 1976, Apple has grown from a small computer company into a global brand worth trillions of dollars. Today, Apple's products such as iPhones, Mac, and Apple Watch, together with services like Apple Music and iCloud, shape what we see as a premium customer experience in technology. Although Apple looks smooth and simple from the outside, its operations are actually very complex. The company depends on a worldwide networking of suppliers and manufacturing partners such as Foxconn to produce its devices. At the same time, Apple faces strong competition from other tech companies like Samsung and Google, and new products must be released constantly to stay ahead. This puts Apple in a very interesting position. On one side, it's a creative company that focuses heavily on design and user experience. On the other side, it must be extremely efficient in managing costs and operation at a global level. So, Apple is not just about beautiful products, it is also about tight control behind the scenes. Because of this, advanced management systems become important. Apple cannot rely only on traditional accounting that look at what has already happened. Instead, it needs systems that help guide future decisions. But here is the challenge. How does a company focus on creativity and also stay cost efficient? There's always a risk that too much focus on cost control might limit innovations. Designers may feel restricted, and long-term investment like research and branding might be overlooked. At the same time, if too much data is kept secret within the company, it can reduce the efficiencies of decision making. So, overall, Apple is a great example of a company trying to balance creativity with control. Its success depends on being innovative while also staying disciplined in cost and performance management. This is why Apple is an ideal case for studying strategic cost management and strategic management accounting in real-world business.
Strategic cost management is a management approach that focuses on controlling costs in a way that supports long-term business strategy, unlike traditional costing which only records expenses. And the strategic cost management looks at how costs are created and how they affect the competitiveness. Strategic cost management is not just about reducing expenses, it is about making smart cost decisions while still value for customers. This involves controlling costs across the entire value chain, including the product design, supply selection, manufacturing, and distribution. In this case, strategic cost management plays a major role because Apple competes through innovation and premium quality. Apple does not aim to be the cheapest company in the market. Instead, Apple offering high products while managing costs behind the scenes. Apple applies strategic cost management from the earliest stage of product development. Product design is where most costs are fixed, so all decisions about the materials, components, and technology are made by considering both performance and cost impact. Another important part of Apple's strategic cost management is supplier management that shows Apple works closely with suppliers such as Foxconn and TSMC. Their suppliers are not just manufacturers, they are partners in the design process. This helps Apple to reduce waste and improve the efficiency before production begins. Apple also enters long-term agreement with the suppliers to ensure the stable pricing and quality. This reduces uncertainty and strengthens cost planning. Overall, strategic cost management helps Apple maintain strong profit margins and while protecting the product quality. Apple does not reduce costs at the expense of innovation. Instead, cost management supports creativity by ensuring resources are used efficiently.
SMA Management Accounting or SCM focuses on using accounting information to support strategy decisions. While traditional accounting report past performance, SMA look toward the future. SMA help managers analyze market trade, customer behavior, competitor performance, business risk, and long-term profitability. The goal is not just to report number, but to guide strategy. In Apple, SMA play a key role in strategy planning and performance management. Apple use accounting data not only to measure profit, but also to understand customer loyalty, product success, and operational efficiency. One important element of Apple's SMA system is performance measurements. Apple measures success beyond financial results. It also evaluates customer satisfaction, supply chain performance, and innovation performance. Another role of SMA in Apple is decision making. Accounting data help Apple decide which product to focus on, how much to invest in the research, and how to expand into new markets. SMA also connect financial and non-financial information. For example, Apple use customer feedback and usage data together with financial results to evaluate product success. In Apple, SCM and SMA work together. SCM control costs at the operational level, while SMA ensure these cost decisions support long-term strategy.
Target costing has pushed Apple to make its production more efficient. By setting a target cost for a new product, Apple worked on making their designs simpler and reducing the number of parts. For example, the MacBook Air was made lighter and slimmer. By cutting down on parts, the target costing also led Apple to use the robots in its factories, like Foxconn, which made the production faster and more efficient while cutting down on labor costs. This also improved the quality and reduced the effect. By innovation in financial performance, target costing helped Apple predict cost better, leading to more consistent profits. One example is when Apple designed its own chips, for example, A series and M series, which reduced the reliance on other suppliers and lower component cost. This helped Apple save money and create better products. Then this approach allowed Apple to keep its cost low and maintain competitive pricing, while still offering high quality and product which keep them financially strong. Impact on learning growth on target costing helped for Apple to improve their continuously. Then this campaign focused on reducing costs, which led to better product development and improved supply chain management. And it's allowed Apple to spend more on research and development, driving innovation like in M series chips, which helped Apple to integrate hardware and also software.
Another strategic technique used by Apple is lifecycle costing. Lifecycle costing focuses on costs throughout a product's life, from production and use to repair and disposal. Apple applies this approach to improve customer experience. Services like AppleCare Plus helps customers maintain and repair products at lower cost. Apple also designs products to be more durable. This allows customers to keep devices longer, increasing satisfaction and loyalty. Financially, lifecycle costing helps Apple reduce costs related to warranty claims. For example, designing the iPhone for easier repair led to fewer returns and lower service costs. Lifecycle costing also increased service revenue. Apple earns from iCloud, Apple Music, and Apple Care Plus. This provides steady income and reduces dependence on hardware sales. In learning and growth, lifecycle costing helps Apple focus on sustainability. Apple now uses recycled materials and environmentally friendly manufacturing. This approach improves Apple's brand and helps employees build skills in sustainable design and operation.
Despite Apple being a highly advanced company, applying strategic cost management and strategic management accounting is not always an easy thing. One major challenge is integrating advanced technology into traditional accounting work. Apple uses powerful data systems, but many accountants need time to learn how to use them appropriately. So even though the tools are advanced, employees must adapt to new ways of working. Next, Apple faces challenges in their global supply chain. Due to Apple works with hundreds of suppliers across many countries, and not all of them using the same system as Apple using, which means that Apple's accountants often receive incomplete or inconsistent data, and they must spend time cleaning it before analyzing. Next, forecasting is also a difficult thing for Apple. It's due to the technology industry change very rapidly and products become outdated in a short time. So, even a small mistake in forecasting can affect the production schedule, pricing decision, and research budget. Next, activity-based costing creates another problem to Apple. Although it gives accurate results and it takes a lot of time and effort to maintain it. Since Apple products change frequently, the costing system must be updated continuously. Next, organizational issues also exist for Apple. For strategic management accounting to work well, there must be cooperation between departments such as accounting, research and development, marketing, and supply chain. However, Apple's culture of secrecy sometimes limits information sharing. Next, people-related issues are also an important challenge for Apple. Some employees must resist new systems because they fear technology might replace their roles or reduce their importance. Finally, workload pressure is another serious challenge for Apple. Strategic cost management requires continuously analysis and frequent update. With Apple's rapid product launches, accountants often work under higher pressure.